Quincy Krosby is the Chief Market Strategist at Prudential Financial. Quincy, good to have you with us. Thanks so much for coming in.
Thank you.
What is this thesis about the financials that you believe that they really have to stabilize in order for people to get much more confident about equities?
Well, yes, absolutely. I mean, even financials as a sector led us out. And so you don't expect the sector that led you out necessarily to be the sector that takes the baton for the next leg up. But financials in particular are a barometer of the economy. They're the soul of the economy. You don't want to see the financials lagging if the market keeps going up. It's going to be worrying many of the technicians and saying the financials need to be part of it. Similarly, you look at the credit spreads. You don't want credit spreads widening. You want them tightening. So too with the financials. You want them participating in a rally.
All right. Now you say also when you take a look at the equity markets, you're a little cautious about what is going to happen in 2010. Why is that?
Well, because there's going to be uncertainty in the market. You do have the tax hikes coming in. You've got the Fed raising rates.
Do you think that's going to happen in the first half of the year?
Well, certainly already you're seeing at the longer end of the yield curve. The Fed doesn't have to come in and actually raise rates for the market to sense it and start pushing yields up. We don't think it's going to be extreme. Everything we think, thank goodness, will be at the margin. But with that said, it does present uncertainty. Markets don't like uncertainty.
All right, so if we live in uncertain times, at least as far as equity markets are concerned, what are some of the industry groups that you would have investors focus on? Would it be healthcare, given all the uncertainty we've had over healthcare reform?
Well, yeah, and because of that, healthcare got beaten up, and healthcare actually started to do very well once that vote went in on a diluted platform. Ultimately, it was a diluted program. But healthcare, because we do think that we're going to see more mergers and acquisitions in healthcare. I think it's going to be an attractive period for M&A in healthcare, and not every subsector within healthcare is going to be affected by the government. We like industrials. If you think about the fact that over the next quarter, the rest of the stimulus money will come into the economy, it will go undoubtedly into many of the industrials. Plus, the industrials also participate in the global growth, which we think will continue.
Now, this doesn't matter then if the dollar strengthens or the dollar weakens, because these are global industrial companies, or are you talking about small and mid-cap industrials that focus mainly on a domestic market?
Well, you know, if the dollar strengthens dramatically, which we don't think will be the case, you will see domestically oriented companies picking up steam. That's typically what happens. But we don't see the dollar, dramatically moving up in order to push U.S. exporters out of the way, out of the party. No, U.S. exporters won't participate.
All right, so we've got healthcare stocks we've got to pay attention to. We've got industrial stocks. What about technology? There's been the case made that even if we get some economic growth in the United States, it's not going to come from hiring. It's going to come from companies spending on information technology budgets.
We think technology continues to do well. It may not be the lead sector as it was last year, but technology certainly is going to do well. It is a part of the infrastructure play globally. Technology is an intrinsic part of the infrastructure play globally, and it will participate. You're also going to see more and more mergers and acquisitions in technology.
Well, you talked about mergers and acquisitions twice. You mentioned it when it comes to healthcare, also with technology. Is M&A going to be a big theme of 2010, companies spending all the cash that is on their balance sheets?
It's going to be bigger than it was last year. That isn't much, because last year was quite slow, but we had some monster deals. But we think that come first quarter or now second quarter, we will see the M&A activity pick up. Keep in mind something. Most people associate M&A activity with good times, a strong economy. The fact of the matter is a slower economy also induces M&A activity. You need to grow. You can't grow organically. Take over another company. Get that market share through a takeover. So we think we're going to see more M&A activity. Companies have cash, and they have to use it.
And do you think that those deals will be accretive to the acquiring company? I mean, is that going to be part of the sort of sub-theme of M&A?
Well, we've seen it in some situations, and the market decides whether or not that is the case. And certainly companies are going to move in that direction. They don't want to be battered. The market's going to, in 1 nanosecond, telling you the deal doesn't work. But most of the time, what we're seeing, the market's been actually pretty good to the acquirer.
What about your call for the S&P 500, let's say for the entire year? I know, 12 months, you don't have a crystal ball, but I mean, is there a possibility, though, that we get some major correction in the first half of 2010?
Well, statistically, it's undoubtedly going to happen. Historically, it should happen at some point. One of the things we looked at, even in today's market, it was a very good market, but volume was very low. You need to see volume pick up. Another thing, we'll be paying attention to the advancers and the decliners. Once that starts to move in the opposite direction, it's telling you something. It's the market telling you something.
And also retail money, right? As well as where retail money is going.
Well, the assumption is retail money is going to flood into the market. We're not so sure about that. The retail investor is, we always say he chases the market, therefore he'll be in. The retail investor has done quite a good job. They've been in emerging markets. They bought ETFs for gold. They haven't done poorly. They've actually done
Maybe
well.
they're smarter than a lot of the professionals.
Yeah, exactly.
Give them credit for
Exactly,
it. All
exactly.
right, I want to thank you very much, Quincy Krosby, Chief Market Strategist, coming to us from Prudential Financial.
Pimm.
Thank you very much,
Happy
Quincy.
New Year.